Hey folks, Chris Versace here. This is the week ahead from March 24th to 28th. That's right, we have count them, six trading days left in the final month of the March quarter. And so far, quarter to date, the S&P 500 is down about 3.6%. NASDAQ Composite down more, almost 8% coming into this week. Now, the next few days are, yes, light on corporate earnings reports. We do have some. McCormick, Lululemon, Winnebago. We'll want to hear what they have to say about consumer spending, input costs, and tariffs. Pretty much, following the same things we did last week when other companies reported. But with Lulu, we will want to size up its comments against those, I have to say it, not so good ones from Nike last week. We'll also get quarterly results from Jefferies, and with that company, we are going to want to pay close attention to what it says about investment banking activity and its pipeline of IPOs, secondaries, and M&A activity. Now, why are we paying attention to these things? Well, it is almost the end of the quarter, and companies are rolling up their books. So we'll want to be mindful of not only what they say, matching it, of course, with what other retailers have said over the last few weeks and what we heard last week from FedEx, Nike, and Accenture. But we're going to want to also pay close attention to the market and the news flow to see if there are any negative earnings pre-announcements. Candidly, given what we heard last week, it's hard to believe that we don't get some between now and the start of big bank earnings on April 10th with JP Morgan and the rest. Now, when we get them, notice I'm saying when, because I do suspect that we will. When we get this wave of negative earnings pre-announcements, yes, we'll want to understand what it means for that particular company. But remember, as investors, we want to connect the dots across the rest of the sector, the food chain, suppliers, customers, all of that. So I would say when we get these, be mindful of looking past just, this close and really parsing the information across a wider landscape. And remember, our thinking has been that consensus S&P 500 EPS growth forecasts for the June quarter compared to the March quarter, up still more than 9% sequentially, is, how do we say it, overly optimistic, and the odds of it being revised lower as we move through the next several weeks, in our view, rather likely. That also means we're likely to see some downward revisions for the second half of 2025 in terms of EPS expectations for the S&P 500. Remember as well that typically when we tend to see consensus EPS numbers come down, two things. One, it's not a fun period of time in the market, but two, it tends to result in folks once again questioning the market multiple. Understandable, as the EPS number comes down, that numerator or that multiple, if you will, tends to go a little higher. So got to be a little careful on that front. But I would say that's the known unknowns that we'll be watching for this week. In terms of the known knowns, we have more than half a dozen Fed speakers making various appearances this week. And yeah, coming off the Fed's policy meeting, one would think that they're going to stick to the Powell script. But Monday brings the March flash PMI report from S&P Global. And when you look at the consensus forecast there, manufacturing is expected to be slightly lower in the flash data. Why? Well, most likely in February we saw a little bit of pull forward given the concerns over tariffs. The service sector, again, in the flash March PMI data, is expected to come in relatively unchanged, which tells us that it's going to continue to grow, but not a very vibrant pace. However, for us, it's the innards inside this flash report that really matter. It's kind of the first hard look, if you will, on new order data and what that could mean for how we start off the second quarter. But we'll also want to pay attention to input costs, output costs. Again, inflation has been sticky, but are we seeing any incremental impact from tariffs? What else is going on? And then finally, job creation. Why job creation? Well, remember, the Fed is sticking to its dual mandate, but this data also comes ahead of next week's ADP employment change report for March and the March employment report. So again, kind of a first look at what's happening in the month of March. Now, with those learnings in hand, we're going to be far more interested in what that gaggle of Fed speakers has to say throughout the week. It's going to give us a lot more insight. And as a result of those learnings, they could potentially alter their language a little bit. That's what we'll be looking for. Personally, our view is that the June policy meeting is going to be the one that really matters. Again, if you just kind of game out the timing, assuming that President Trump goes forward with April 2nd tariffs, and we see some reciprocal tariffs from the Eurozone and others, most likely starting mid-month. By the time we get to the Fed's May meeting, we really won't see a lot of that flowing through the data. That means the June meeting will be more important. And at that point, we'll have gotten data for April. We'll have started getting some data for May as well. So again, that June meeting, that to me is far more pivotal in terms of what Fed policy could be for the second half of the year. So we also want to keep in mind too that we are getting some other data this week. Most folks will be kind of keyed in for the February PCE price index data that comes on Friday. Now, yeah, I know it's the Fed's favorite inflation metric and all that, but candidly at this point, I think what we learn in the March flash data is going to be far more insightful than what we see in the arguably rear view looking February PCE price index data. And remember, we've gotten a whole bunch of data regarding inflation in the month of February. So to me, what's going to be a little more insightful later in the week is going to be the consumption data that we get for the month of February. Now, look, we already know that the February retail sales data was a little weaker than expected, particularly in certain categories like dining out. But when we get the consumption data, we're going to get a lot more granularity on where folks were spending and where they were not spending. So it's going to be some insightful data that we'll want to pay attention to. And then outside of all of that, just two other things. First, we actually have some IPO activity to watch for this week. CoreWeave is expected to price its IPO on Thursday. And I don't know if you saw it, but exiting last week, reports indicated the deal was already oversubscribed. Now, that's pretty constructive with several days to go in the roadshow. But let's remember that when it comes to IPOs, it's not just the pricing of the transaction that matters. It's going to be the follow-on performance that's important as well. And yes, we will be watching that, but we suspect that Klarna and StubHub, both of which recently filed their IPO docs, will be watching as well. And if I had to bet, I would say that Stripe, Chime, and others that are getting ready to go public will also be watching this transaction rather closely. And one other thing to think about, as the CoreWeave deal gets done, you may want to consider that NVIDIA owns about a 5% stake in the company. And finally, with just over a week to go, as I alluded to a few minutes ago, until President Trump's April 2nd retaliatory tariffs go into effect, this week we'll want to keep our gaze on Washington to see if there are any new developments that suggest something less than feared could be on the way when it comes to those tariffs. And that, my friends, is your week ahead. We'll see you on Tuesday and Thursday with some additional comments. And before you know it, our next batch of thematic signals will be coming your way. Thanks for watching.